What's up, guys? This is going to be the start of a new series that I'm going to be making on YouTube. It's called Financial Statement Analysis, whereby I analyze financial statements of companies and just give you an idea of what is contained in financial statements. So here I'm using an app called Trading 212, and I'm going to look at all the companies that are available. This is not the ISO account. So as you can see, there's 9,251 companies available to be analyzed, and I'm going to start with the first one. Let me just choose Germany. So it breaks them down into countries. So I'm going to choose Germany. I'm going to choose the energy sector, and I'm going to choose the first one, which is its ticker symbol is NEL. Sorry, no, it's D7G. And as you can see, what I always look for is the past performance. When it comes to max, it shows you its lifetime performance, which has been 29.81% return since the start of its list, since it was listed. And so with this company, I've already invested a pound, so it's down by 35% since I've invested a pound in this company. Here you can have a breakdown of the company, like a summary of what the company does and stuff like that. So as you can see, it's a Norwegian company, which deals with renewable energy equipment and services. So it's industry gas companies, hydrogen technology companies, yes, alternative energy. As well as a Britain energy. Yeah, it does. So it's basically an energy company. It deals with various forms of energy. It shows the CEO, the employees, all the different figures, and the key ratios. So, the most important thing when it comes to information about a company, when I'm deciding whether or not to invest, is it starts from the key ratios part. So everything down from here is really important to me. So market capitalization 19.01 billion euros, which is quite a large company, which is very, very good. Large cap stocks tend to be more reliable than mid cap or small cap stocks. The P ratio is good, which is 13.78. The P ratio is just the price to earnings ratio, or price to earnings per share ratio. The revenue, which is 651.88 billion. I always compare the revenue to the market cap to see the relationship, which is kind of like the P ratio, but it's not, because the P ratio considers earnings as opposed to revenue. I'll explain a bit about that later. The earnings per share, which is kind of important for me. I compared the earnings per share to the share price. So the earnings per share is 94 cents. The share price is €1.35. So it's actually over half, which is 50% return, which is actually pretty good. Over 50% anyway. We'll have to figure out why the hell the earnings per share is so high. Dividend yield, which isn't being shown, which is not good. Which means it's usually the dividend yield figure. If it's ever missing, then it's usually because the stock price has dropped quite rapidly by a large amount in a short period of time. The beta, which is the market performance against the market average. Of course, the prices dropped by 35%, which will show. It's actually supposed to have a higher beta, because a beta of 1 is like normal, and anything above that is quite represents volatile stock, but it's less than half of the average, which is pretty good. Profit margin for the year is almost 200%, which is it's not really reliable. You can never have a profit margin of that magnitude and be consistent with it. And you have to look. I always look more into detail when it comes to like really large profit margins. If you look at the past 2 years, 2019 and 2018, they had a negative profit margin. So the revenue is the purple, the profit margin is the blue. So the revenue was about half a billion, but the profit margin, which is the cash taken away after all the assets taken away after all of the expenses are paid, was negative. So, um, let's look onto total assets, um, which is under the balance sheet. The total assets, which is the balance sheet shows it's more of like a picture of the company at that current period of time that was made. So the total assets are 6.14 billion. The total liabilities are 668 million, which is amazing because it's less than 10%, which is really good. Actually, no, it's just above 10%. It's about 11%. As you can see, the debt to asset ratio is almost 11%, which is amazing because it's pretty low, which means the company won't be paying a lot of interest payments to its lenders because it doesn't have much debt. So we're moving on to the cash flow statement. Operating income is negative, invested income is negative, financing is positive. So if you add up the two losses, which is about 500 million, just over 500 million, and you look at the positive, which is the financing, it's made 2.31 billion. So about 1.81 billion was made. Is gonna be in a net change in cash. So the company's grown in that year, in that financial year, by about 1.81 billion. This is the last number or figure on on the last statement of all the financial statements. So it's kind of, when you're looking at financial statements, you need to see it as a story. It starts with the income statement, then the balance sheet, then the cash flow statement, and then when you get to the end of the cash flow statements, that's when you know that figure, the net change in cash, or the net change in cash, or some people refer to it as free cash flow. They're slightly different, but you can kind of see them as two one and the same in this regard. That figure is how much the company's grown by in that financial year. So that is probably the most important figure I look at when it comes to determining how well the company's done in a particular year. So the company's grown by that much, which I think is really good. Stock price has gone down. Of course, we need to figure out why the stock price has gone down by so much. Also, the dividend yield, which is missing, which is also very, very important. One of the most important factors that I consider when investing in a company. We need to figure out why that's missing, or we need to get an accurate figure of that number. Those are the only two weaknesses I would say, besides the profit margin and net income. And that is how you analyze the financial. That is how you analyze the financial statements of a company. I'll be back tomorrow with another analysis, and I plan to do this for all of the companies on the Trading 212 app, and I hope to see you in the next one.